coordinator and entire management team always encourages us to conduct such live webinars and such current trends webinar for benefits of the students. So the Department of Bachelors of Commerce in Accounting and Finance has organized this webinar, that is financial markets, how the financial markets are currently performing and what are the basic types of financial markets. We will come to know in this webinar what is money market, capital market, who regulates these markets, which are the instruments traded in these markets, how, through which account we can deal in this market, like we have to open a demat account, and there are the in money market there are the other various institutions. So in this webinar we come to know the basics of the financial market. We have with us a resource person. She is a doctorate, Dr.Shruti Chavarkar. She is has a lot of experience in teaching experience. She has 13 years of teaching experience. She is currently working in S.K. Somaya Vidyavihar University. She has completed M.Com, M.Phil, PhD, NET-SET. So she is a very, we can say, have a knowledge in this field. And she is a currently coordinator of financial market department. She is also a paper setter in various subjects such as auditing, portfolio management, mutual funds. She is also a member of Board of Studies in Accounting and Finance of S.K. Somaya College, and also appointed as a PhD guide for the commerce students in Somaya Vidyavihar University. She is working as a subject expert of the Board of Studies of Thakur College of Finance we can say in the Department of Financial Markets as a program. She is designing the syllabus and she is also setting the paper. She is being moderator in various programs such as TYBBI, TYBAF, TYBMS, TYBFM. Also, she has appointed as a subject expert of the Board of Studies of the Financial Markets of MCC College, Mumbai. Also, she is a subject expert of financial market in Tolani College, Mumbai. So she has a very varied experiences in so many colleges. She is a paper setter. She is a Board of Study member. So a very right person with us to have to give the gist on this financial market. So I welcome you on behalf of the S.S.T. College team, management, and the coordinator of BAF department. Welcome to you to this live session on financial markets.
Thank you, Varsha ma'am. Thank you, Mithili ma'am also. I would like to say thank to S.S.T. College of Arts and Commerce for inviting me for this live webinar for our students. Thank you very much for giving me this opportunity. And today I am going to give the brief idea about introduction of financial markets. We will see various types of financial markets and try to learn about what kind of different financial markets are there. 1 minute. Let me share my screen with you. I hope my screen is visible now.
Yes, ma'am.
Yeah. So financial market. Our today's session is based on the topic of financial market. This is Dr. Shruti Chavarkar. Thank you to Varsha madam for giving my introduction. And now I would like to start with my topic. Financial market. First of all, we will see what is finance. See, when the companies are starting their businesses, they need money. They want money for day-to-day transactions also, and they want money for big projects which they wanted to start. Some companies wanted to start their projects, their new plants in some different areas. For that, they require big amount of money. Sometimes some companies need money for their daily consumption, for their daily expenditures, like payment to their suppliers, payment to their bills, and so on. So finance is required for every companies, right? So this kind of finance they need, and from where they will get? Of course, they don't invest their own money always in these businesses. They need the money from others. Who are they? They are savers. There are savers in the market, right? Those are having surplus money with them. They have this money with them and they wanted to invest this money in different kind of investment alternatives. So in the market, we can say that there are two parties, savers and borrowers. So what is the place? Which is the place where these two parties will come together and deal with each other? That's why we will see that financial market is the place where these two parties will come together and deal with each other. That is nothing but financial market. Financial market is a place where buyer and seller participate in trade of assets and securities such as equities, derivatives, then bonds, currencies, etc. Okay, this is the place where people will come together, not only companies but the investors who wanted to invest their money in this investments. So they will come together, they will trade with each other. Those who require money, they will get money from the person or from the parties which have surplus money with them. So trading of financial assets are done over here. Which kind of financial assets? Equities, derivatives, bonds, currencies. These are the financial assets on which they can trade with each other. Now, financial assets is working as an intermediary between savers and investors. As I told you that financial market is nothing but the bridge between savers and the investors. They are trying to link these two parties, savers as well as investors, and that way they are trying to give the service to both of them, savers as well as investors as well as borrowers. Now the it is required that some prices should be determined. This function is also done by the financial market. They are determining the prices of all these financial assets with the help of demand and supply for those financial assets. Okay. Now, what are the main functions of financial assets? First financial function of the financial market is mobilization of savings. Now, what is the mobilization of savings? See, if I have money with me, I have 1 crore rupees in my hand, and I kept that money, that amount in my cupboard, okay, for 1 year, for 2 years. What will happen? That money will be same. If I'm not spending them, it will be same as it is. It will, there would be no any increase in that money. Okay, but when I am giving this money to any company for utilizing it for the for starting their any new project or new plant, then what that company will do? That company will start the new company with that money. What will happen after that? Once the company will be get started, people staying around that company will get jobs. After getting the jobs, what will happen? Of course, they will get money from their jobs. When they will start getting the money, what will happen? They will start spending that money on different branded goods and services, and they will start consuming their money. They are spending money on different consumable products. So spending will be increased. When people are spending, when they will get money, right? So here the people started getting the money because of their good jobs in this company, and now they are like to start they will start spending that money on different products and services. Once this will start, what will happen? The company which are providing these products and services, or the that company's demand will be get increased, right? Once the demand of that products are increasing, what will happen? The company's sales will be increased. Once the sales will be increased, what will happen? The profit of that company will be increased. And if you have invested in those companies as an investor, you will indirectly get dividend on that profit. So this way, your money is mobilizing from one party to another, and directly, indirectly, it will come back to you in the form of dividend. When you are investing your money in equity shares, it will come back to you in the form of dividend. If you are investing your money in debentures, it will come to you in the form of interest. So that way, it is nothing but the mobilization of saving from one party to another party. But when you are keeping your money means you are keeping your money just in your cupboard, it is not called as mobilization of money. Even though if you are keeping your money, transferring your money from one cupboard to another cupboard, it is not called as mobilization money, because it is not using for the productive use. Okay, so financial markets main function is that how to mobilize the savings of the people into productive manner. That is the main function of the financial market. How to motivate people for using their money, for using their savings, and convert it into investment and bring them in financial market. Okay, see the countries which are advanced countries like UK, USA. Why these countries are called as advanced countries? Because their people, the citizens of these countries, are always trying to mobilize their money in the financial market. Their financial markets are very strong, and that's why these countries are developing day by day. So for the development of the country, it is required that mobilization of the savings should be done, and it should be done in productive manner. That is the main function of the financial market. Now, second function, determining the price of the securities. Yes, this is also one of the most important function of financial market. How to give the prices to these different kinds of securities. There are so many securities available in the financial market. So many companies are also involved in this financial market. How to determine their prices? It is totally depending on the demand and supply of the products. If the demand of any particular stock is increasing, obviously the prices of that stock is increasing. If the supply of that stock is increasing, obviously the prices will be started declining. So that way, the determination of the prices will be done by the financial market. Best example is stock market. They are determining the prices for the securities like equities and debentures, depending on the demand and supply of their products. Now, liquidity to tradable asset. See, in financial market, the tradable assets means the assets which you can trade in the market. If I have PPF, my investment is in PPF, or my investment is in NSC, then this kind of investments, this kind of assets are not tradable. Tradable assets are like shares, debentures, bonds, which you can sell to any other person in the market. So whenever I want money in by converting them into cash, this is the place where you can liquidate your tradable asset. So financial markets main function is that how to provide the liquidity to these tradable assets. It helps the investors to save their time, money, efforts, because here at one place only you are getting so many alternatives in hand, and there is no need that you have to approach different people at a time. If you want to sell something, just give your shares in the market and wait for the buyer. Immediately you will get the buyer. So that way it is helping to save your time, money, and efforts. It is basically for the main and very important function of the financial market is economic development. As I told you that advanced countries are developing. Why? Because their financial markets are strong. That's why it is needed that you have to focus on financial market. Once we will be successful in how to give the importance to our financial market, when we will achieve that target, when we will see that our financial markets are good in the world, we will be the best country in the world. So that's why economic development can be done. As I told you that mobilization of saving means nothing but transferring the money from one party to another. That way, slowly and directly and indirectly, you are helping to develop your economy, your society. And if your society is developed, your economy will be get developed. So that is the main, these are the main functions of financial market. First one is mobilization of the savings into productive uses, determining the prices of the securities, providing the liquidity, save the time, money and efforts of your parties which are involved in these markets, and help in economic development of the country. Now, who are the players of this financial markets? Of course, banks. RBI banks, so many different kind of banks, they are involved in this financial market. Day-to-day basis, they are also trading in the financial markets. Then financial institutions are also involved in the financial market. Foreign institutional investors, they are also investing in the financial market, and they are trading continuously in the financial market. Stock exchanges like NSE, BSE, these are the parties which are involved in the financial markets. Brokers, they are working on the behalf of buyers and sellers, and they are giving the facility or services to these people. So they are also the player of the financial market. And the merchant bankers, who are helping the companies in the management of the issue of any public issue if they wanted to go for it. Then the merchant bankers are the investor bankers which are helping them how to manage their issues timely and properly. So these are the main players which are there in the financial markets. Now today I am going to discuss with you this main financial markets. By nature, there are two parts: debt market, equity market. On the basis of maturity of claim, again there are two parts: money market and capital market. Again, the capital market is divided into two parts: primary market, secondary market. And apart from this, we will discuss in this session foreign market, exchange market, commodity market, and derivative market. So moving towards the next session, next slide, we will start with the debt market, which is also known as the bond market, fixed income securities market. See, the government of India or any government of any countries need money. They also need money. So where this is the market where government is approaching their investors. So this is the place where you are giving the money to the government or some corporates also. Government may be semi-government or central government. Semi-government institutions are also there, like municipalities, like BMC. They also in that their bonds also you can invest your money time to time, and from that investment you may get in future fixed rate of income from them, and that's why it is called as fixed income securities, where you are getting a return fixed in nature. Here your return is not fluctuating. Whatever is predetermined, that interest only you will get by investing in this kind of securities. And this is the market where you can invest your money. That's why it is called as debt market or bond market or fixed income securities market. This is the place where the investors and traders trade in debentures and bonds and other securities. After that, we will see equity market, which is also known as share market. I hope this is very easy. Everyone knows about it. NSE, BSE share market of our country. Very well known equity share market. Here you can trade in the shares, equity shares of the companies which are listed in the stock exchanges. Okay, that is the first condition. It is required that the companies should be listed in the stock exchanges, and you can trade in this companies shares. You can buy or you can sell as in these companies time to time. Here, when you are investing your money in equity shares, you are getting the benefit of ownership, which is not there in debentures. When you are investing your money in debentures, you are just becoming, you are just getting the interest on whatever amount is borrowed by you from that company. But when you are investing in equity shares, at the same time, you are becoming the owner of that company. For example, if I have one share of any Reliance company, then I will be the owner of that company also for that part. So that way I am getting the facility of ownership. Will get the voting rights in that management also. So that kind of facility you may earn when you are purchasing any equity shares of any company, listed company in stock exchanges. Shares of publicly traded companies are traded in stock exchanges, but here the one drawback is that here you are not getting a fixed rate of income timely. Means like in debentures, when you are investing your money in debentures, you are getting fixed rate of interest time to time. But here it is not in fixed in nature. This is fluctuating in nature. Sometimes it is depending on the decision of the board of studies also. If they are agree that yes, whatever profit they have received, this they have earned in this year, we will share that this year we would like to share this profit with our shareholders, then only in that case you will get the dividend from that company. But sometimes some companies are deciding, no, this year we are not in the favor of distributing this profit amongst our shareholders. In that case, you may not get share in dividend from that company. So that way it is not fixed in nature, and that's why it is different from debt market. Here your returns are not fixed in nature. After that, we will see money market. Money market, there are two markets, money market and capital market. Money market, as I told you earlier, that some companies need money for day-to-day transaction. Some companies need money for large projects. Okay, when the company needs money for day-to-day transaction, for just for short period of time, in that case these companies are entering in money market, where they can purchase or sell the instruments like treasury bills, commercial papers, certificate of deposit with the other institutions, financial institutions, or RBI or other banks like that. So money market is nothing but the components of the financial market, where financial instruments with high liquidity and short maturities are traded. Here, the maturity period of your instrument is less than 1 year. Okay. Mechanism that deal with the lending of short-term funds. Now we will see the basic main features of money market. First thing, as I told you, that this is the short-term funds. Here, all the securities which are traded by you by the parties are having the lifespan of less than 1 year. Some of them are having the lifetime, period of 1 day to 15 days also. Some instruments are having 91 days maturity period. Some instruments are having 364 period maturity period. Some instruments are having 180 days also. So depending on the instruments in which you have invested, the maturity period is depending. But the final maximum period is less than 1 year. You can't hold this kind of instruments for more than 1 year. Like in capital market, you can hold it for more than 1 year, but in money market, you cannot hold any instruments more than 1 year. Immediately within a year, you have to sell it off. Okay. As money market is for short duration, it does not provide high return on investment. Like in capital market, when you are holding any stock for a longer period of time, and after 10 years or 12 years you are selling it off in the market, you may earn good amount of return on that. Your capital gain would be higher in that case. But here, because the time span is very less, means less than 1 year, here there is very less scope for the getting high returns in this market. But still people are investing, and institutions are investing, banks are investing and dealing in money market. Why? Because it is giving you the liquidity. High liquidity is there. You are having, whenever you want to sell any products in the in this market, immediately there would be the seller. That way you can able to convert your products into cash immediately. And that's why this money market is also called as liquid market. It conducts without the help of brokers. Yes, there is no need of brokers. Like in capital market, we have seen, you can say that there are brokers involved. Through brokers, you have to do the transactions. But here, there is no requirement of brokers. Through fax, telephone and internet, the transactions are taken place in money market. These are the basically establishing the link between the institutional participants, and basically RBI is having a main role in money market. RBI, some instruments like treasury bills are issued by RBI. So that way, RBI is playing main role in the money market. They are working as the regulatory body also of this money market. So constantly monitor and supervision is done through the RBI time to time in the money market, and that's why it is helping you that there would be less risk also, because timely monitorization or supervision is done by RBI, and that's why it is less risky also. Now, the instruments which are buy or sold by the parties are like treasury bills. T-bills is called as treasury bills. Now, this treasury bills is issued by the RBI, and because it is issued by RBI, it has security. It is secured in a product called as, and when RBI is issuing this, these treasury bills are issued at discount. For example, if any product is of, I'm just giving you the example that 100 rupees. So RBI will issue you at rupees 80. And at the time of redemption, RBI will pay you rupees 100. So that margin of 20 will be your profit. So that way the transactions are done in this money market for the treasury bills. It is always issued at discount and redeemed at par value or face value. Now, commercial papers. Commercial papers are compared to the RBI is unsecured because it is issued by the companies to the other institution. So here you will miss the commercial papers. Time period is also from 1 day to 15 days to 1 year, like that. Then certificates of deposit is issued by the banks. Okay, it is negotiable in nature. It is like fixed deposit only, but fixed deposit is not negotiable in nature, but certificate of deposits are negotiable in nature. You can transfer to one person to another person. That way the mobility can be done in certificate of deposits. And call money is nothing but the interbank transactions, where one bank is traded with the another bank. See, in the day-to-day transactions, many banks are also required money. So if they have any shortage of money, and they time to time they have to maintain reserves also, they can't touch the CRR or SLR reserves, and that's why to maintain them, they sometimes they may feel the shortage of fund. In that case, one bank can borrow from another bank for only 1 day or 2 day money, and that way the call money is taken place, transactions are taking place in money market. Then DFHI, that is Discount Finance Housing House of India. This is the institution which is working for specially for the high degree of liquidity of the money market, and that's why I told you that the money market is highly called as a liquid market in our financial market compared to capital market, debt market, and all. Next market we will see, that is capital market. Capital market is the market, as I told you earlier, that sometimes the companies need large amount of money. In that case, they need big amount of money, and they want to go for the public issue. Okay, in this case, the companies are approaching capital market. Here, the lifespan of all the instruments, equity shares, this thing, preference shares, are their lifespan is more than 1 year. That means the investor can hold these shares or these products for more than 1 year. They are not supposed to sell it off back in the market within a year. So they can hold it for the longer period of time, and after selling them in the market, they can make the profit from that. Now, the basic features of the capital market is that it is for the BDM and long-term investment, and equity share, debenture, preference shares are traded over here. And the parties which are involved in the capital market are financial institutions, banks, corporate entities, foreign investors, like that. Capital market instruments are riskier sometimes compared to the money market, because here with respect to the returns and principal repayment, now you can see that the market is volatile. There would be the chances that sometimes you may lose because of the volatility of the market. So that way sometimes it is riskier also, and it is including another sub markets like which are known as primary market and secondary market. This market is also providing the liquidity. Within the 2 days you will get amount whatever you are selling securities in the market. For that, within 2 days the balance the cash will be transferred in your demat account. So that way it is also providing the liquidity for you. The possibility of earning is higher if the securities are held for a longer duration. So that facility is not there in money market, because in money market you are just holding any product for just 1 year, but here that facility is available to you. You can hold it for longer period of time. Suppose today I am purchasing any shares of any company, but the market is not good because of the war of Ukraine, Miss Russia and Ukraine, this thing. So I can hold it for next year. I can hold it for the till the end of next 2 years also, and after that I can sell it off in the market, and that way I can earn good profit from that sales. So that way you can hold your securities for longer period of time and you can earn good return on that. So as I told you, capital market is divided again into two parts: primary market and secondary market. What is the meaning of primary market? See, primary market here, when the first time any company is going for the issue to their public to sell their shares to the public, it is called as fresh issue. It is called as IPO, for example, initial public offering. First time whenever the company is offering their shares to their investors, then it is they have to go through the primary market. So in the primary market you can see that company directly selling their shares to the public. Okay, and once it is done, once that particular person got those shares, for example, Mr. X has purchased 100 shares from XYZ company, and now he is willing to sell those shares because he need money from by selling those shares in the market. Then he cannot go back to that XYZ company to sell to get that money. He has to go where? Secondary market. Secondary market is the place where traders are where the investors and the traders are trading with each other. Here company is not involved. So XYZ, once it is sold all the shares to their investors, their role is over, and now the role of secondary market will be get started. So if you want to make a money by selling your shares in the market, then you have to go to secondary market, which is also known as stock exchanges. I hope most of you are aware about stock exchanges like BSE, NSE. Okay, the company does not participate in these transactions. The company's role is over at the primary market only. In secondary market, company is not involved. Okay, now we will see basic features of primary market. As I told you that it offers securities for the first time, and after first time, suppose one company is there, they have got the authorized capital of rupees 20 lakhs. But right now they don't want 20 lakhs to be get issued to their investors. They just first issue they did with 10 lakhs. Okay, they just issued 10 lakh amount of shares to the issuers, to the investors. And after 5 years, again, if they are thinking that, oh, we wanted to start with another, we want more 10 lakhs now, then in that case, they will go for the further issue, that is FPO. So that way IPO and FPO are involved in primary market. So for IPO and for FPO, can approach the investors directly. But once it is sold by them, once all the shares sold by them to the investors, their part is over, and then the secondary market part will be get started. So frequency of selling by the company is done only once in this primary market. and the parties are involved are company and the investors. Investors are directly purchasing the shares from the company in primary market. Sometimes and not only that, the prices is also decided by the company. Sometimes the companies are asking for book building. That is also done, means they are giving the chance to the investors. Now select the range in which you wanted to purchase, and after that they will go for the issue. So that is also happening nowadays. So primary market is the market where the company is deciding the price for their securities. But in the secondary market, we will see that the companies are not deciding the prices. But the demand and the supply for that particular shares are determining the price for that particular shares or debentures, like that. So primary market is the main purpose of primary market for the company is that how to raise the capital for any expansion or diversification of their company's income. The company sells the shares to the investors at a fixed price, which is done fixed price, which is fixed up by the company, and there is no organizational setup for primary market. You cannot see any fixed geographical setup for the primary market. When we are talking about secondary market, if I can ask you which security market are there in Mumbai, you can immediately give me the answer. NSE is there in BKC, BAC is there in Fort area. So that is organizational setup. But in primary market, such kind of organizational setup is not there. Now secondary market, as I told you, which is also known as stock exchanges. Here the offers trading of already issued securities, means once the securities sold by the company in the primary market, after that whatever trading, buying or selling will be done, that will be done through this secondary market. So existing share securities are traded in this market, and that's why it is also called as aftermarket or share market, which is known as stock exchanges. Now the instruments on which the trading is done, that is those are shares, derivatives, and so on. And the frequency is not once by the company, but here the frequencies of the trading is done as many as possible. One share you can trade with any party so many times. Okay, you can sell it to B can sell it to C can sell it to D. That way, so many trading can be done in this secondary market. There is no any limitations, and here no company is involved at all. The trading is taken place within the investors only. The main purpose of this secondary market is to help the traders or the investors to liquid their to get the facility of liquidity. Suppose I have some shares of XYZ company, I wanted to sell it off in the market. This is the place where I can give my shares to my brokers, and I can get money by selling those shares in the market. So this is providing liquidity to the investors time to time. And the price is determined not by the company, but by the demand and supply of those shares in the market. And it has the geographical setup and organizational presence. As I told you, NSE is there, BSE is there, which are having some geographical setup, which is also known as secondary market or stock exchanges. After doing this, we will see the next market, which is known, very well known, that is foreign exchange market. Basically, the tourist or these are the players which are involved, the parties which are involved in the foreign exchange market: central bank, institutional investors, commercial banks, brokers, individuals, companies. These are the parties which are involved in the foreign exchange market. See, in foreign exchange market, the transactions are done for the currencies like euro, dollar. See, we have seen that in equity market, the transactions are done for the equity shares, like preference shares, like that. But in forex market, which is also known as foreign exchange market, here you are buying or selling currencies like euro, dollar, and so on. And currencies are not just traded, but sometimes it is exchanged for one another. So Japanese currency can be exchanged for the another dollar currency. That way also can be done. And if I am Indian and I wanted to go somewhere in USA, I want to go travel, then in that case I will purchase USA dollar, because there my INR currencies cannot be worked out. So in that case I need dollars in my hand for dealing in that countries. So in that case we have to trade, we have to buy dollars, and we have to give the INR to the exchanges. It is having high liquidity. It is the biggest market in the world, and it is always done on OTC background. OTC means over the counter. Here stock exchanges, through stock exchanges we are not dealing. Here one-to-one basis you are doing. Means if you want to sell some dollars, you can go to the banks, you can give it to them, and you will get the money, or you can get the exchanges in that case. So OTC market is used by in this market by individuals, by for financial institutions, businesses, and governments also. Foreign exchange transactions occur because of international trade, because of the traveling. So many people are traveling from one country to another. In that case, they require these currencies in which you are going to visit your whatever country you are going to visit. For those if you are visiting UK, then you should have pounds in your hand. If you are visiting USA, then you should have dollars in your hand. So that way the transactions can be done. You have to purchase them whenever you are visiting those countries. And it is having market transparency. It is very important feature that here everything related to that currency is disclosing time to time, and this market is working for 24 hours in a day, and for 5 days, from Monday to Friday, this market is working for 24 hours. Okay, हमारा स्टॉक एक्सचेंज मॉर्निंग में शुरू होता है 9:30 and closing at 3 o'clock, but this market is working for 24 hours. Okay, and very lower trading cost it has. Means you are not supposed to find out the buyer for your product, you are not supposed to find out the seller for your product, like that. If you want to buy something, no need to find out who is selling that particular product. Here is the market, everything is available on the screen. Immediately you will get, say if you want to sell something, you will get buyer immediately. If you want to buy something, you will get seller immediately. So that way it saves your trading cost and transaction cost. And dollar is the most widely traded currency in this market. Yeah, in this market there is another 4 features are contracts are there. Spot contracts, where immediately it is done on the current prices. Means suppose at right now it's 345, whatever is the price displaying on at 345, that current price, on that current price the transactions will be done immediately, and the delivery will be done within T+2 days. So that way it is called as spot market, where immediately on the current prices the transactions are taken place. Whereas swap means here one currency is exchanged for the another currency. Means Japanese currencies can be exchanged for the dollar currency. That way the swapping can be done. If and it is also done on the OTC basis. Then forward contract is also there. Forward contract is where the people are not trading on the current prices, but they are determining some future prices or predetermining, and the transactions will be done in future, not now. So that is called as forward contract. But still, forward and future, there are differences. In forward contract, 2 parties are coming together and their contracts are customizable. Means they can change their contract as per their convenience in forward contract, because these 2 parties are not knowing, but they can have the facility of making the changes in the contract. Whereas in future contract, all the details of your transaction, of your product, you have to give to the stock market, and through stock market you are dealing. So that's why in future contract, flexibility is not there. Whatever you have given once, it is not going to be changed. But in forward, you can change the contract time to time as per your convenience, because only two parties are involved, you and the other counterparty. So there is no intermediary between both of you. So directly you can change your contract time to time. So it is not rigid in nature, it is flexible in nature, and it is not subject to any price fluctuation. But in future, there is a there is a need of intermediary, and with that intermediary is nothing but the stock exchange. So once you have given everything, all the details about your transaction, you are not having the facility to change your transaction again and again. Once it is given to that stock exchange, you have to you don't have any right to change it again and again, and that's why it is rigid in nature. But the benefits of this future contract is that just give your details to your future stock exchanges, and stock exchanges will work on your behalf. So here your headache is getting reduced. Now everything will be done by the stock exchanges, and very standard manner they will do, and very professionally they will do. So that way it is reducing your headache. So no need to worry about any changes in the or you will get, whether you will get buyers for your products or not, or sellers for your products or not. So all the we can say that all work will be done by the stock exchanges for on your behalf, like that. It is subject to change in the prices on the basis of, again it is working as here also the prices are fluctuating on the basis of demand and supply of your product. So whatever you have given, you should be very, very careful before submitting all the details to your stock exchanges, because once it is given by you, it is you will not get the chance to change it. Now next one is commodity market. Commodity market is the market which is all now getting well known, means popular in the market. This is one of the very new market compared to the other markets. Here the participants are basically farmers, producers, merchantisers, and then traders, importers, exporters, and they are dealing with each other on commodities. Commodities like agricultural commodities like grains, food, fibers, corn, soybeans, and all, and energy commodities like crude oil, natural gas, etc., and metal commodities like copper, lead, and zinc, etc. And not only that, precious metals are also traded in this market, like gold and silver. Here again there are four types of contracts. One is forward contracts, where two parties are dealing with each other. Future contract, where the parties are selling their products through the intermediate like stock exchanges. Then options are also there, where a call option is there and put option is there. So this different kind of contracts are also there in commodity market. And next one, which is the last one, that is derivative. What is derivative? Derivative market is the market where the financial instruments of any security with the price is dependent on the price of another instruments. Means, for example, if I wanted to sell any oil derivatives, then the price for that oil derivatives will be derived, or will be decided on the basis of the value of the oil in the oil market. So means here the price of your derivative products is changing on the basis of the price of your underlying assets on which you are trading. So the fluctuations will be done according to the prices going up or down on your in your underlying assets. So that way the derivative products price will be also increase or decrease. So here that's why it is called as derivative market. Means here the prices are deriving on the basis of underlying assets. So common underlying assets are used in this market are stocks, then bonds, commodities, currencies, interest rates, and market indices. This market will be run on the basis of over the counter basis also. Means party to party, those two parties are involved, they will trade with each other without any intermediary. That is called as over the counter market. And it is also run on the basis of exchange through, means there would be the intermediary like stock exchanges, and through stock exchange you will do the transactions with the other parties. So that way also the transactions are done in the derivative market. Done from my side. Again, here there are three parties in commodities market, in derivative market, and foreign exchange market. There are three types of investors, like parties. We can say that hedgers are there, arbitrageurs are there, and speculators are there, who are trading in these three markets basically. Hedgers are trading to minimize his risk involved in whatever the transaction done by them, and arbitrageurs are trading in this market by taking the advantages of two different markets prices, and from that different prices they are trying to earn the profit. And speculators are dealing in the products by taking high risk for the high returns. So that way these parties are basically involved in all these three: commodity market, derivative market, and foreign exchange market. Thank you. Yes, ma'am.
Thank you so much, ma'am, for explaining in detail the basics of all the things, like what is money market, who regulates, which are the instruments, what exactly the capital market, who regulates, कौन से instruments है, commodity market. So by attending this session, we have a few questions in the chat box. So I'll take the first question. Like, is RBI is having the authority to control unorganized money market?
See, basically RBI has given the proper guideline what which parties can trade in the money market. Anyone cannot trade in the money market. They have some guidelines for that, and once you are completing those guidelines, if you are eligible by completing all these guidelines, automatically you can be the eligible candidate or parties which can control, which can trade in the money market. So that way RBI always keeps control on this money market. That's why I told you that because RBI is involved in money market and they are time to time monitoring this money market, the risk is less in this money market. They are taking, not only that, RBI is asking this all companies to give on the reports on daily basis. What happened, which kind of treasury bills you sold, which kind of commercial papers you sold. Every day they are supposed to send the report to the RBI time to time. And why this is this practice is there? Because to minimize the risk. If they found that something is going wrong, they will immediately catch that party and they can punish or they can give the penalty to that company. That way nowadays money market is very strong and RBI is keeping watch on that.
Okay, thank you. The next question is, how commercial bills are different from the commercial papers?
Commercial bills are like discounting bills, means it is similar to discounting bills. For example, one party is means I sold something. Suppose one party sold the product to another party on credit basis, but right now I need money, but that money I have not received because my bill is due after 2 months, like that. But right now I need money. Then what I can do? I can go and give their invoice to the party, to the bank, and bank immediately will give me the money for my, as per my requirement. And later on, after 2 months, that bank will collect the money from that third party, which is going to give the money to me after 2 months. So that way, commercial bills are nothing but part of bills discounting only. And commercial paper is different. Commercial paper is issued by the big companies, those who are having credit worthiness in the market. No, not all companies can issue commercial papers. For that also they have good guidelines. Your net worth should be this much, your record should be this much, every 3 years you should earn the profit regularly. So many criteria are there which you have to fulfill, and then only you can sell your commercial paper in the market to the other parties. So that way, so many restrictions are there. If you are fulfilling, you are completing those all the points given by the money market, then only you can eligible to sell your commercial paper in the market.
Okay. The third question is retail bankers can act as a merchant bankers? Like which examples, if any?
Actually, for getting the merchant bankers, there is a certificate. Means anyone can't work as a merchant banker. For that also, you have to fulfill the criteria given by the stock exchanges, given by the RBI. SEBI is taking care of that. They have given the guidelines also, what you are supposed to complete, which criteria you have to complete, what kind amount they have to deposit their money also with the SEBI. A certain amount they have to deposit with them. Then only, not only that, they have to give the important information like are they having proper infrastructure, are they having good people with them, what kind of qualified people they have in their offices. Every information they have to submit to SEBI, and then SEBI will allow you to work as a merchant banker. Once that certificate is given to you, then only you can work as a merchant banker. Any banks cannot work as a merchant banker, because that for that also specialization is required, because merchant bankers are helping the other companies in the managing the issue, public issue जो रहता है उसमें मैनेज करने के लिए वो लोग हेल्प करते हैं. So they should have the expertise knowledge in that field, then only they will get the certificate and they will be considered as merchant bankers.
Okay. Who regulates commodity market?
Commodity market is regulated by FMC. And earlier in our country, for 30 years, I think commodity markets was a ban. There was a ban on commodities market, but later on, now our government sanctioned that bill, and now you can say that commodity market is also working in our country.
The last question.
Yeah, tell me.
On what basis the companies are selected into indices like top Nifty 50, Sensex 30? So on what basis, and how frequently these top companies changes? Like every time the same 50 companies comes into a picture as a Nifty, every time the 30 companies comes into a picture as Sensex?
No, it's not like that. Every day the scenario is changing on the demand and supply of that company. Suppose today, yesterday, the company which was very good in the market, top in the first 10, next day it may come, if the means their prices are coming down, the people are selling their shares in the market. Sometimes if any wrong information or wrong news also came in the market, because of that the company's goodwill is getting affected. All different factors are there. On that basis they are deciding which will be the top 10 companies and which will be the top 50 companies, and this way. So every day it is changing. It is not that every day the same company would be there in the same list.
Okay. One more last question is interesting. Is it right time to invest in the stock market after COVID and after this Ukraine war? So
yeah,
for investors, is it a right time?
Yes, good question actually. See, most of the time people are, it's a mindset of our people that अरे market गिर रहा है, अभी मिस बहुत बुरा हो रहा है. No, it is not like that. This is the right time to buy. Okay, but buy and hold. Don't think that today I will buy and tomorrow I will sell. This kind of strategy you should not follow in such kind of situation. Passive strategy you have to follow. If right now the market is getting down, this is the good position where good companies, stocks or shares are available at cheaper rate, right? So this is the time when you have to buy this company's shares, and wait for a longer for 2 years or for 3 years, when you will and time to time, yes, time to time you have to observe the market. Most of the time investors are like that, they are purchasing, and once they purchase, they are not looking at looking back what is the position of their shares, whether they are increased, the price has increased or decreased. So purchase right now and hold it for a longer period of time. See, when time to time check it out, well, after 1 year, after 6 months, what is the position of your shares, is it increasing or not. That if you are keeping watch on this way, then it will be helpful for you to get proper time when you are supposed to sell your shares. So diversification is also required. Don't select don't Warren Buffett ne kaha hai ki don't put all eggs in one basket. So same way, don't put all your investment or your money in all same kind of investment. Divide your investment, purchase 5 shares of one company, 5 shares of another company. That way you have to purchase different kind of company shares, and not only company shares, you have to select different sectors also when you are investing your money. सो थोड़ा फार्मास्यूटिकल में से पैसा डालो, थोड़ा ऑयल कंपनी में पैसा डालो, थोड़ा इंडस्ट्री में दूसरे सॉफ्टवेयर इंडस्ट्री में पैसा डालो. दैट वे यू हैव टू डू द डाइवर्सिफिकेशन, व्हिच विल बी वेरी हेल्पफुल फॉर द इन्वेस्टर्स.
Thank you so much, ma'am, that you have taken out of your daily scheduled time. You have given us your valuable time to us on this financial market. Really, the concepts are very clear. In detail, you have explained us the instruments of the entire both capital as well as money market. Not only that, it was not restricted to that. You have explained us derivatives, commodity market too. Thank you so much.
It's my pleasure. Thanks for inviting me again, and thanks to your institution, S.S.T. College of Arts and Science, Commerce, for inviting me for this beautiful session. Thank you so much.
I must say, today also our students went for RBI Monetary Museum, and we are planning to take our students to NSE, National Stock Exchange.
Very good, very good.
So students are very much excited to ask these type of questions and attend these types of webinars.
I hope from my side I have done
true. Yes, ma'am.
Are they satisfied or not? I don't know.
They're satisfied. That is why they are asking questions.
Okay.
Yes.
Thanks.
Thank you so much. Yes.
Okay. Thank you very much. Bye-bye.
Bye.
Bye.